tell them I'm the truth, I think they knew it. Don't like to talk about the shit, I like to do it. So while these other hungry going through it, you see me thumbing through these hundreds, getting to it. Ain't had to tell them I'm the truth, I think they knew it. Don't like to talk about that shit, I like to do it. So while these other hungry going through it, you see me thumbing through these hundreds, getting to it.
What's going on? Welcome to the More Estate Podcast. I'm Harvey Wireless. He is Bryant Mormon. You are the what of the show?
So why do you always get to do the intro? What if I want to do the intro? Just kidding.
We can do it over again if you really feel some kind of way about it.
No. Hey everybody. My name is Bryant Mormon. I am the More in this More Estate situation.
That's why I do the open. My name is Harvey. I am the estate. In this, we're calling it a situation now. Is that what this is?
Partnership.
It's many superlatives. What this is.
Okay.
Yeah.
Tag team champions. There it is.
The undisputed tag team champions.
Love it. We just need a manager.
Wait, we do.
Oh, Dom. Okay.
Dom. This is actually the second shout out Dom has had on this podcast. We did it in the first episode.
Okay. If
you remember, it was a long time ago. Your memory's not that good, but I remember because we shouted out Dom, who makes all of this happen. He's running around he's working harder on you to look good, but Dom runs around.
Sir, that doesn't require a lot of effort for the record.
Dom. Can I get back to I'm trying to give Dom his flowers now.
Hey,
Dom,
look, our favorite nerdy Toretto over there. He is the man, the myth, and the legend.
Yes. He does not get enough credit, nearly enough credit as he deserves. He allows this whole operation to operate and go and get it out on to the interwebs to all of you people. So please do not compliment us for how all this looks and runs. It is one person, the man, the myth, and the legend.
And do not add him because he's helping us out, not y'all.
Yeah.
But we do love him though.
Yeah.
Appreciate him.
Get your own technical director.
Yeah.
Let's dive into this episode. I'm excited about this one because we're talking about entrepreneurs and so many different tentacles in that.
Right.
I said all of that just so I could say tentacles.
Okay.
It's a fun word to say.
You had calamari yesterday or something?
Oh, no, but... okay, sidebar. I'm on this diet fast thing with my wife.
Okay.
And you said calamari, and I love calamari, and I can't have some for a while. So it makes me sad. But something that makes me happy is this thing called real estate and entrepreneurs. If you're an entrepreneur and you're thinking how can I get into real estate? What do I need? Because it is different for entrepreneurs. Now on the estate side, right? All of that's the same in the sense of identifying a home, getting, linked up with a realtor, et cetera, et cetera, et cetera.
Right.
The difference and maybe some cognitive, what's the word I'm looking for?
Cognitive differences?
No.
Dissonance?
Dissonance. Cognitive dissonance.
Okay.
That is going to be the word of the day on this show.
Scrabble challenge.
Yes. But if you're an entrepreneur, the game is a little bit different when it comes to the money side.
100%.
But I'm reminded of a story you told me. You had a client, he was 1099, self-employed, and he was trying to get a home for his family, and he didn't file taxes for a few years, and he was trying to get a mortgage. But this is a great kind of segue into what we're talking about today. So tell us that story.
Sure. All right. Yeah. So Harvey, we did have a client who was in a situation where he had not filed his taxes in the last couple of years, but really needed to get his family in a place in a hurry. And this was a primary residence, and it's a no income verification loan. So it's not necessarily like a no doc program. We still are reviewing your credit, we're just not reviewing the income. Typically on those, minimum down payment is going to be 20%. kind of similar to that DSCR loan that we talked about like an episode or two ago.
Mhm.
But 20% down minimum, and usually like maybe 12 months worth of reserves. If you are in a situation where maybe you're self-employed and your income is not, you are in a cash-based type of business, or maybe you had not filed tax returns, we absolutely can get you in a home with that 20% down and those 12 months worth of reserves. And all I mean by reserves are 12 months worth of mortgage payments. We can absolutely get you into a house.
And that's just the thing. I think a lot of people see, oh, no income based loans or no income verification. But there's the other side of that. You have to have strong credit.
Sure.
And you have to have strong reserves. Now you're saying 12 months or more on average, a year's worth of
mortgage payments. So when you think about risk, the analogy I love to use is when we were all in high school, you took the ACT or the SAT, and ideally you wanted to have good grades. And if you didn't have good grades, they would say, hey, your test score has got to be good, and maybe you need some extracurriculars. Risk is kind of similar to that a little bit. So if you have not filed taxes, the offset to that is you're putting down a lot more money, 20% down, as opposed to like 5% or 3.5% down. And then they want to make sure that you have those additional reserves of having those 12 months worth of mortgage payments set aside.
So again, it's another example of there are options out there, but
sure,
you got to get into the details because there's considerably more down payment that's due, considerable amount more of cash reserves that is needed. Can you talk about when you look at entrepreneurs, 1099 clients, how many of them come to the table prepared against how many of them are educated on, ooh, I thought I needed this, but actually this, I don't have that, or I guess just that the percentage of knowledge base, how many people who are entrepreneurs know what to expect against they don't know what to expect.
I do run into it if we're talking about percentages. If it's 10 self-employed customers, I would say maybe half, maybe even 60% of them maybe are not aware that we're looking at your net, not your gross. Your business may have taken in $100,000, but if you have $65,000 worth of expenses, then you only made $35,000
as income.
Correct. And you might struggle to get approved for the house that you want with only $35,000 worth of.
I actually had a client recently who I worked with. He was a 1099 employee.
Okay.
And we had a great conversation about what you just mentioned, because there is, it's this dichotomy when it comes to taxes and 1099 and entrepreneur people, because you want to write off as much as you can where you can legally, because you want to take advantage of those benefits of being an entrepreneur or business owner. When it comes to being an entrepreneur and business owner and you are trying to purchase property, having all of those deductions act negatively against you, because to your point, what you just said, though it helps you save money because you're not paying as much in taxes because you're claiming all of these deductions, it hurts you when wanting to purchase a home because it's actually reflecting that you have a more or less income against what you actually could report if you wanted to eat some of those deductions and not claim them. So I guess all of that long-windedness to say that if you are an entrepreneur, if you are a 1099 employee, and you know you want to purchase a home within the next 12 to 24 months, readjust how you go about preparing your taxes. Talk to a tax professional, talk to Bryant, a mortgage professional, so that you are educated and you are properly preparing for that home purchase down the road. Because the last thing you want to do is think, again, we talked about this in our last episode with first-time homebuyers having the idea of, hey, I have enough for my down payment, I can go buy a house. No, you still need closing costs, you still have appraisals. Same kind of scenario here. You're going to think, hey, I have 2 years worth of bank statements, 2 years worth of tax returns. But that's only half of it. So you
keep
need
in mind,
to
as a
prepare.
random side note, speaking about taxes, we absolutely can get you approved if you owe the IRS money. However, you need to have an IRS approved payment arrangement in place. And ultimately what happens, whatever your monthly IRS bill is, we add that
to your monthly debt.
Add it to the debt income ratio, yes.
Now, when you're talking about a approved and ongoing IRS debt payment program, are there any stipulations in that? What if somebody's like, I have one, I've missed a payment or two, or what have you? Does that affect any of that? Obviously, I know that if you don't pay your payment plan with the IRS, they can obviously revoke the program and come after you. Sure. But I'm just saying, does it have to be perfect payment history, or just, hey, if there's something in place and you're paying it and you have things situated with the IRS, you could still move forward in the process? It
varies from loan program to loan program. Some loan programs, it just needs to be in place. Some loan programs require that it's in place and that you started making payments. So it's just going to vary from customer to customer. And if you, to your point, you missed a payment, let's have a conversation about it. And we also have the ability to chat with an underwriter. If we got some hurdles that we're not sure about, we can go straight to the source, have an upfront conversation. I'm having the conversation with the underwriter. Hey, this is my customer and this is what's going on. What do the guidelines say to be pertinent to that situation? And then go from there. And then be able to come back to the customer and say, okay, I had the conversation with the underwriter. This is what they're saying. And then go from there. So that way the customer, before they ever put that earnest money down, before the playoffs start, so to speak, we have the answers that we need and the customer can make an informed buying decision.
I think the biggest takeaway from these last two episodes that we've done, this one and the one prior, talking about pitfalls of first-time home buyers, and this one, which these past two episodes, I think, are probably my favorite up to this point. And the biggest takeaway that I'm finding is that knowledge is power. Educate yourself and talk to a respected professional. When you're wanting to buy a home, talk to a realtor. It doesn't mean you have to hire them, but talk to them. Get to know the process. You have to know what you're getting yourself into. If you want to watch all of the news channels and read, all of the news websites of what's going on in the world of real estate from a very high level, fine. But it's important to talk to a realtor in the city that you're looking to purchase in, because they're going to have all of the micro information and news that's going to be pertinent to the decision that you are going to make in the area that you want to buy a home. Secondly,
your point,
go ahead.
I think, because sometimes I think people, they're like, well, Bryant, when should I start? When should I talk to you? Or when should I start to talk to Harvey? I know for me, when I wanted to buy a house, those conversations started the minute I signed that lease and I said, okay, I'm buying a house. Great time for us to have those higher level conversations. As soon as you sign that new 12-month lease and you're like, I'm not going to renew this thing, a great time for us to start having a conversation. So if there are some things that we could touch up here or there, we can have those conversations.
I agree wholeheartedly. I would also say, if you're just curious, that is a good time to have a conversation. It's never too early. My mom would always say, it is never too early to start now. Simple, but I mean, it's like, oh yeah, when you think about it, it's like, yeah, it's almost like that saying, like, there's no time better than the present, or whatever that saying is. So,
or that one, the best time to buy real estate is now. Or always yesterday, or something like that.
Something like that. The other takeaway is the same sentiment, just as an entrepreneur, 1099 employee. I guess 1099. I guess that's an oxymoron, 1099 employee. But there is a blind spot. And it is important that you utilize resources out here, like myself, like Bryant, or whoever is in your network or in your communities, that you need to reach out to, because especially if you're 1099, because the way that you maneuver, or the way that you might have to maneuver, it may cause you to begin down the road a lot sooner than maybe your buddy who is a W-2 employee. So again, educate yourself out there. You can always reach out to myself. You can reach out to Brian. No matter what market you're in, okay? we're happy to give you all the information and knowledge that we have catered to your specific situation. And then from there, if we have to refer you out to somebody that's in your market that could be more micro to your situation, we're happy to do that. But at the end of the day, we just want to make sure that you guys have all the information necessary for you to make the most educated investment decision. And that is what buying real estate is. Yeah. It is an investment decision.
I agree. I mean, the part that sticks with me the most is speaking to a licensed professional, speaking to a licensed real estate agent, a licensed mortgage professional, to make sure that you are getting the real information as opposed to, I hate to use the word hearsay, but I don't know about you, Harvey, but I sometimes when I'm having conversations with people, they'll reference a family member, and perhaps that family member bought 10 years ago, 5 years ago, and the circumstances are not the same. So since every deal is it's its own unique situation, your relative or your friend or your coworker situation may not be yours, and it may be different. So certainly speaking to a licensed professional to get that information to make sure you are getting what you need.
In addition, that family member might not know of privy information when it comes to mortgage programs or different ways that you can negotiate your offer to purchase real estate that a realtor would know, or a licensed mortgage professional would know, like, hey, did you know you could get up to $12,500 paid in closing costs? Or did you know about this program where you could have zero down payment? You could get special grants based off of income qualifications. Your family member, by and large, who isn't in this industry, isn't going to know that. Not saying that your family member isn't educated or can't give you any nuggets, but I think Ronald Reagan said it best: trust but verify. Especially if it's somebody that is not a licensed professional talking about an industry that you need to have a license in.
I think that's a fair assessment.
Well, on that note, we want to thank you for joining us on this edifying, educational, insightful. Any other adjectives you want to throw in there for this episode?
We educate in the streets. I love it. These mortgage real estate streets.
You can find me on Instagram at Harvey Warlich. You can find my man Brian here at
Mortgage Pilot on Instagram, where we are still continuing to navigate these friendly mortgage skies. We land in planes around here. Mortgages, that is, not real planes. I'm not a licensed pilot, for the record. Asterisk down at the bottom.
Yeah, which reminds me, if you ever are on an airplane and you see this guy in the cockpit, run. Fair assessment.
It might be a tour. It might be a plane tour.
Just make sure the engines aren't running when this guy's in the cockpit.
I think I'm a great driver, though.
Oh yeah, I've driven with you. You're not a bad driver.
So I mean, if I'm a good driver, then why couldn't I be a good pilot?
And I think flying a plane, driving a car, it's a little bit different.
They both have a steering wheel, so what's the problem? Do they have pedals on the plane? Are there pedals?
I think there might be, but I think also planes, it's like almost like a joystick. I've seen and then they have like the one where you like a half steer.
that BMW cockpit looks like an airplane sometimes.
Well, on that note, I don't know where to go from there other than thanking you all for joining us here on the More Safe Podcast. Like I said, he's Brian. I'm Harvey. We will see you next time.
Hey, y'all. Appreciate y'all. Appreciate all the likes. Appreciate all the shares. Appreciate those subscriptions as well. Y'all be good, and we'll see you on these real estate streets.
See ya.